welcome to Good Money Guide Taxi Trading. In this episode, we're talking to my old mate, Darren Sinden. Now, Darren's just been on stage giving his top tips on trading, so we're going to give him the app, see how he gets on trading in real life. Darren.
Hello, Richard.
Hello, mate. It's a bit of a squeeze getting in. Thanks for joining us.
My pleasure.
How's today been?
Good so far, yeah. Bumped into quite a few people I know, and it looks like
busy,
a
isn't it?
good crowd.
It's a good turnout, actually. That one over there has been full almost.
Well, that's where I'm speaking, so they're all obviously here to see me.
What are you gonna talk about?
I'm talking about the 5 indicators of trading success.
Okay, excellent. For the purposes of the Good Money Guide, you're here to take our taxi trading challenge. I'm sure you know how it works. You get 20 minutes in the back of the taxi with a trading app, preloaded, 10 grand in virtual funds. We're just going to have a chat about trading, what to do, what not to do, what to look out for, and so there's the app. And then you're going to put some trades on. Tell us what you like. Tell us what you don't like. It doesn't matter if you make or lose money, because one of the things we're trying to get across is that having a mad punt in 20 minutes in the back of a taxi is probably not the most sensible way to trade. Which actually, just before we get started, brings me quite nicely onto this is not investment advice. We don't know your personal circumstances. This is just chat, opinion, and a bit of education for fun.
Absolutely. Right, well, I think I'm going to have a little punt on the DAX. And
everybody loves the DAX. It's one of the best things to trade.
And I fancy selling a few of these.
So we're on a 15-minute there, aren't we?
We are, yeah. And I fancy that, as I say, we could come off. So let's see what we can do here. Looking to sell, and we're going to go trade size. What should we do? Let's live dangerously. Plump foot. Oh no, too many.
We haven't got the beans for
contract size.
So there you go. So you got that's 7,600 quid.
Yeah, all in.
Quid's worth of money. Okay, all in. Just yeah.
Okay.
Balls out.
We've sold 10 in the DAX, and where we go, 17,843.6.
Okay,
cool.
Well, let's see how that goes. We'll give it roughly 20 minutes, and we can job in and out of it as we go along. Now let's go. One of the cool features actually is this: is if you click on your position here, if you click that button down the bottom there, it brings up a little chart so you can see your position on the 1 minute chart as well as your P&L.
Going swimmingly so far.
Yes. How are we doing?
We're down 22.
Do you know what? It's actually been, so we had a really good day yesterday. One of the guys made money, but the rest unfortunately didn't. What's interesting actually is even though they didn't make money in the 20 minutes they were in the cap, if they'd run those positions for the rest of the day, they might have done a bit better.
Well, that's the thing. I mean, my time frames wouldn't really be over 20 minutes. I mean, I'd probably be looking at 2 or 3 hours for a scenario.
As much as I'd like to have you in the back of the taxi for 3 hours, we'd have to drive down to Cornwall. So no, some good analysis recently on the Good Money Guide. I've seen you LinkedIn. You're sort of smashing it on there. Some of the stuff you write for us has come to fruition as well.
Yeah, I to be honest, nearly 40 years of doing this now, I tend to call it as I see it. I like to take quite a holistic view. I mean, technicals are great for short to medium term trading, but you also do need to know something about the fundamentals of a stock or any financial instrument to us, and have a feel for the zeitgeist of the market. It doesn't matter at the end of the day what you think. Keynes said the market can be irrational for longer than you can remain solvent. That's probably never been truer than it is today. But yeah, touching wood. Yeah. I do seem to have been calling things right.
And you're absolutely right about the valuation side of things. You can give a company an absolutely spot-on valuation, but if everybody else disagrees with you, it doesn't matter whether you're right or wrong. And I think a good combination of technicals and fundamentals is always important.
Yeah, it is. One of the things I'm going to say in my presentation is be pragmatic, not dogmatic, and I think that's so important. What's more important, being right or being profitable? And I think we'd all have to agree that profitability is the ultimate end goal. Yeah. Knowing why something happened, that's useful. Maybe that's good for hindsight, but there's no point in ignoring the facts. Nvidia is overvalued, but it doesn't stop going up. Yeah. So don't fight it. You can't.
Maybe that's where I'm going wrong with my trading. I've always had mixed success, but I've always viewed like trading's always been like about the fun money part of the portfolio for me, and I've loved it. You know, I started trading when I was 18, been a broker, been involved in all sorts of different ways. But I think for me it's more about being right on a position rather than making money. That's obviously where I'm going wrong. I'd be more interested in thinking about where something's going to go and wanting to be right about it rather than making money. Maybe it's because I assume that I won't. But that's trading for you. So that's one, and it's the five.
The five indicators of trading success. So
give us the key takeaways.
That's the first one. The second is that, you know, it's a trite saying, it's probably a bit of a cliche, but the trend is your friend. I mean, Matt is, you know, coming back to what we would have talked about, but basically I think where so many retail traders go wrong is that they oppose a prevailing trend. Why would you oppose the market? The market's got an infinite supply of money, it's millions of participants, and you're one person with a finite supply of funds. Go with the trend. If you do want to oppose a trend, wait for the market to tell you that trend is about to change. You get plenty of signals, plenty of opportunity to do that.
There's a couple of indicators that it's about to change.
Well, I mean, you can look for reversal signals like a candlestick charts, like a shooting star is one of my absolute favourites. I place a lot of importance on moving averages and moving average crossovers. So, you know, a 20-day moving average down through a 50-day, or a 5-hour moving average down through a 20-hour moving average. It's those kind of signals that should pique your interest and alert you to the idea that things could be about to change. Remember, an uptrend is just a series of higher highs and higher lows, and a downtrend a series of lower highs and lower lows. When things stop trending in that way, then you've got a clear indication that the trend is about to change.
Absolutely, it's a great moment to put hedges on as well. Like if you don't want to step away from the market,
yeah, absolutely,
you can buy some puts or or cover your portfolio with a short. How are we getting on?
It's very boring. So we're down £17.
We're 5 minutes
now £22.
Okay.
So we're toggling back and forth between the small loss to the small.
We're gonna have to wait for it. We're a big move.
Shall we be bold and square in reverse?
Yeah, go on then.
We close the position.
Let's do the classic.
Let's do the classic.
Let's do the classic. That's not working out. Let's go the other way. Let's lose money on both
back
trades.
To the DAX, and we're going to go long this time. So we're going to buy. Yeah, and we'll do 10 again, and we'll buy it. And see if we can make some money on the upside. Now, obviously, in the real world, you wouldn't want to be jobbing around like this, topping, tailing yourself, eating up, paying away spread and com. But for
the purposes of talking about what's going on in the market, it's always worth.
It is. It's clearly the wrong thing because we're now £67 offside. So we would have been in profit on the other trade. So there we are, everyone. Don't do that. Do as I say, not as I do. Clearly,
this is the thing about putting a time limit on trades. This is one of the reasons I wanted to keep it to 20 minutes, because it's like so much of trading is about what not to do rather than what to do. I mean, the thing to do is run your wins, cut your losses.
Absolutely, yeah.
And if you've got the luxury of time, that's a great thing to have.
Well, the main thing that I would try and stress to people is don't do what we've just been doing and trade off the shooting from the hip. Have a plan, have a style or a way that you're going to trade, have some rules, stick to those religiously. Don't trade emotionally, don't move outside of your trading plan, because if you do that, you start making arbitrary decisions. Then your P&L will turn very much into an L, and your capital can be eaten up very, very quickly, I'm afraid.
What's been your best trade? Do you remember your best trade over the years? Well, I've had a couple.
Being long tallow oil while I was away on holiday, and they went up £2 a share was
that's a great holiday as well. Great holiday
it
bonus
was,
as well.
and it was good all round. Clients were happy, and a nice. Well, the holiday can't be bad when you're on a holiday and it actually pays for itself. So that one sticks in mind. The ones that really stick in my mind are the ones that didn't get done, the ones that got away. Yeah, you're right. I was saying this the other day, actually. It's the trades that you didn't put on because you didn't get around to it, or the trades that really busted you. I think that you remember. But it's all good lessons, isn't it? It's all won't do that again, or remember. Well, that's the other thing. If you do make mistakes, and obviously people will, what you need to do is learn from them. There's nothing wrong with making losses, making mistakes, as long as you learn from that experience and you feed back into your own process and you don't make those same mistakes again. Unfortunately, a lot of people fall foul of things like anchoring, which is where you take an incorrect decision making process and carry it forward into your next trade, your next decision, and just do that ad infinitum, and that's compounding your losses is not the thing that you want to be doing. Don't be afraid if you're not making money. Don't be afraid to stop, walk away from the desk, stop completely, examine your process, see where you went wrong. It can be as simple as you're not in the right frame of mind. Leave it, come back to it. It's a marathon, not a sprint.
So that's the third thing. So fourth and fifth.
Look for things that can help you in the market. So I at the moment, a lot of my shorter term calls are based purely around momentum, and so look for ways that you can understand and track momentum if that's going to help you in your trading. And in my talk I'll be discussing that. So I think you should try and systemize as much as possible using data. There's thousands of financial instruments one can trade. Sometimes trying to find a way in is very difficult, but if you do try and approach things in a systematic way, create a spreadsheet, filter that spreadsheet looking for particular things. Like one of my favourite views, stocks that have gained consecutively over 5 days, all losses. There's a clear trend there. There aren't that many of them. There's a way in why are they doing that? Is there more to come? Have they moved way ahead of the market? Is it now time for a bit of mean reversion? Are they going to bounce back? So that's the kind of thing that piques my interest. Volume is also very important when you're trading individual equities. If there's excess volume, that's usually a good sign, and you can have believe the move's got more credence than say a move made on thin volume, which is likely to reverse at any moment.
Absolutely. So talking of things like you mentioned sort of building out a spreadsheet and filtering positions. Top resources.
I also
for traders
think that you don't need to spend a lot of money. Good Money Guide now has got some fantastic resources.
Good Money Guide, there you go.
In terms of
subscribe to Darren's analysis,
technical data on stocks. Only yesterday, I was having a dig around into the stuff around NatWest. Away from the Good Money Guide, I like a system called barchart.com. Very reasonable. It's not fantastic for European and UK equities. It's more focused on American stocks and futures markets, but to be fair, a lot of the action is in the States, so that's a very good resource from free, which is also important. The other one I sort of dip into now and again is our old friend Investors Intelligence.
Investors Intelligence is still going strong, isn't it? Yes. I think I had lunch with them the other day actually. I think they're updating the website actually. Hopefully there'll be a little upgrade on Investors Intelligence. You can get a few of the Investors Intelligence signals on Good Money Guide as well. That's worth a look. What else do you like at the moment? Where do you think traders should be looking for ideas?
Well, obviously outside of the Magnificent Seven and their equivalents in Europe, I'd be looking for things quality companies that have been left behind. This isn't obviously for short-term trading like we're talking about now. We're really doing.
Hold on, are we long that? We're long.
We're not. We are. We're doing 100. We're losing 92 pounds. Closing again. It's been a disaster.
Are we going to go short?
Try something.
Let's have a look at it. Let's filter through. One thing about this app, it's a great app, but you know how on Investors Intelligence you can rank stocks by relative strength. Yes. So you get all of the stocks that are going up, and you can just click through. You go, that stock's going up, don't like it because of that. That stock's going up, don't like it because of that. And you get a very visual representation of the market. Well, none of these apps.
That's something that I find very useful.
What's that?
This is the FTSE, so we'll live dangerously and buy a few of those. Okay.
You've got to buy British.
Yes, you have indeed. Yeah, no, I'm very much into visualizations, Richard, and I think that's the other thing I would say to people. Try and find the visualizations and the platforms that speak to you. It's no good, having an all-singing, all-dancing system that you pay a load of money for each month. If the information it spits out doesn't say anything to you, doesn't speak to you, leaves you completely flustered and don't know where to go next. So one of the other things I would say in my talk later is keep it simple, stupid, KISS.
Yeah.
Do that. You use the system that speaks to you. Don't worry about what other people are doing. See so many charts covered in lines and squiggles and different colour blocks. Paralysis by analysis for me.
I think you're absolutely right. I think people overcomplicate it. You look at something and either by what you think on the fundamental basis or what you think is priced into the market, so what's going to go up, what's going to go down, and then you take a position one way or another. But I think you just see on social people just talking absolute nonsense, and I think some people look at a complicated thing and go, oh, it's complicated, it must make sense, so let's go with it.
I think they do, but in reality, Occam's razor, the simplest solution is usually the right one. Well, we're actually making some money. Well, on this trade, we're up £10. So
we got 4 minutes 45 seconds left.
Well, at least we'll make one profit.
Yeah, so let's just have a look. Let's bring the 1 minute chart up. See how lucky we're going to get on that. That's quite a range at the minute, really.
Yeah,
isn't it?
it's moving sideways. What we'd like to see is a breakout, obviously, to the upside, but one never knows.
It's a shame. It's quite a slow day. I mean, we've got non-farmed, haven't we, at 1:30?
Yeah, we have. Yeah, but quite an important set of data, really. Given the sort of change in mood among traders about interest rate cuts since the turn of the year. We came in the year, starting the year, people were talking up to 5 or 6 cuts in 2024. To be honest, I'm of the opinion now we might actually be lucky to see any. If we see another strong number, job creation in the States, it would be very interesting to see how the market reacts, whether that would actually be bad news.
Do you think a lot of it's priced in already, though?
Well, yeah, I think we'd have to see a much bigger number and probably revisions from some previous data to really upset the apple cart. Yeah. But I think there are still probably people who are hanging on to the idea of 4 or 5 rate cuts, and I'm not sure that's to say. I'm not sure that's happening. Yeah,
it's a bit of a slow day other than that today. So hopefully we'll have someone over that, and then hopefully we'll have someone over the US Open. So we'll have those 2 potential market mover things. But of course, the other slight limitation about, even though it is a 10 grand float, is that margins for retail traders are relatively capped. Now, I mean, I think it was a sensible move from the regulators. I think a lot of people are guilty of overtrading. I think that's literally everyone we've had in the back of the taxi has said one of the key mistakes retail traders make is over leverage.
Yeah. Now, leverage is a very powerful tool, and if you're using it, you need to respect it. And I think people seem to miss that it's symmetrical. It works just as well, if not quicker on the way down than it does on the way up. There are so many mistakes you can make, like confusing equity in your account with cash, and you've got a running profit that can disappear very quickly, and then suddenly you've got positions that potentially unsupported. You might be on a margin call, you don't meet it quickly enough, and you closed out. Look, margins did need to come down. They ran far too far. When people started offering 500 to 1 on FX, it was nonsense. I think there's a middle ground. We've probably gone a bit too far for all retail traders. I think the hurdle to become professional is a bit high. It wouldn't hurt, I don't think, if we had some sort of middle ground, which I think is the sort of thing they do in Poland, where as in the previous regime here, there's a certain amount of discretion as to how people are classified. But it is what it is. You can't fight the regulator, just like you shouldn't fight the Fed. It's
also quite hard to hack your way into a pro account without not hack your way in, but like you can't upgrade unless the compliance checks are pretty serious on the professional upgrade. You can't just say you've got €500,000 and you can't just say you've got to prove everything.
I don't think I would qualify. And
I'm sure you would.
No, I believe I would. I don't think that I would actually be classified as professional now. So. It's bizarre, isn't it?
Yeah, well, I guess it depends how much you trade and when was the last time you worked for an institution as well, isn't it? They're the 2 things you need to pass. So what's going on for the rest of the day then? Let's see. So we're down again.
No, we're down. Oh dear, it's a disaster. Another £35. Luckily, it's not my money. So
luckily it's not mine either. It's
there we go. We'll shut that. Rest of the day, do my speech and answer questions probably after that. And then I've got some people to catch up with, a few meetings, press the flesh.
It should be a nice day. There's lots of people here.
Yeah, I'm looking forward to it. There's a few speakers I'd like to hear from
the industry. So let's have a look. So we've got 30 seconds left. So the trade you put on at the start was shorting the DAX.
We short the DAX, then we went long the DAX. We topped and tailed ourselves. We went long the FTSE.
We were all over the place.
We were briefly up in the FTSE. We cut that.
But I'll tell you what, we'll keep an eye on the DAX for the rest of the day and do a little bit of a recap to see where the DAX would have gone.
I do fancy it.
Had we stuck with our first instinct, which is second guessing yourself as well.
That's there we are. We made some of the classic trading mistakes.
The pressure of it all. The pressure of 20
live
minutes.
television.
All right, brilliant. Well, look, Darren, mate, thank you, Richard. Great to have you in the back of the cab. Some good advice there from Darren. keep an eye on those positions. If you want to have a go in the back of the Good Money Guide taxi, play in our trading league, just Google Good Money Guide taxi. See if you can do any better. Thanks for watching.